Hello and good weekend to you. This is Doug Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 5th of April. Starting off with the major markets, we've had this incredible crash. The prices bounced up, a little bit of a dead cat bounce to the 38.2 retracement of the entire swing back down. I think in the meantime, we're probably going to be range bound in this area. And of course, cryptocurrency is going to be going for a ride with the larger markets as it goes up and down in the near term. Eventually, as I've been saying, I think it will just decouple down the road, perhaps sometime by this summer. But for now, everybody's going on a ride for this roller coaster. So I wouldn't be surprised to see additional weakness coming in this week. The news is not getting any better, and it's pushing the curve further and further out. As I look at the crypto markets, they're not moving all that much right now. Again, we've had the similar kind of crash and then dead cat bounce. We've had a bigger bounce in crypto for most cryptos, especially Bitcoin, than the larger US markets. But again, I still think that this rising pattern will probably break to the downside at some point here, even if it's to give us a higher low to work off of. And that may be the final bounce before we get the eventual decoupling. This decoupling is going to happen on its terms and not necessarily when we want it to. So we're just going to have to be patient. But I think any dip from here is going to be a good time to start to accumulate. So you'll see me start to be more aggressive going forward with selling puts against this, especially if they're physically settled puts, which will allow me to commit to assignment. Looking out at the top 10, again, same comments that I've had for the last couple of weeks. Not really all that impressed by some of the bounces I've seen in most of the other top 10 assets. Not much of anything is moving at all. Now, we do have some exceptions, which I continue to bring up to you guys, like Ocean is just breaking out. It just cannot be stopped right now. Hero is also setting up with just a tremendous bull flag. So what I would be looking for is the break of about this level here, about 1400 sats might be the next break. If we put on the chop index, we may see that this is just about ready to go. Not quite. Not quite. I'm a little surprised that this is not ready to go. A couple more days and we're going to have enough energy to support the next break. So let's go back to our top 10. There's a couple of opportunities, I think, within the realm of options, which may be showing this week. So if we put our chop index on Bitcoin, we see a lot of energy in the daily chart. If we go out to the weekly chart, it is starting to recover. We're now into the realm where we can start to see movement. We've had a huge move down. This is where the exhaustion is, and actually the market's doing exactly what it should be to build up energy again. So it can go either way from here. It's not constrained by the weekly chart. And actually, I haven't looked at the monthly chart in some time yet. And look at the amount of energy on the monthly chart. We're starting to build up. We haven't had this level of energy on the monthly chart in a long time. We could be looking at a fairly large move. Normally, the first move from here is going to be the false move, which in my mind is going to be a pullback along with the larger markets as well. I think at some point our patience is going to pay off fairly soon. But again, it's not going to happen on your schedule, not going to happen on my schedule, only when it's ready to go. And normally markets will move in that kind of freight train fashion when no one's looking. I hate to say it like that, but usually markets will trend the strongest when people have the most skepticism about their ability to do so. Okay, so we know we have some potential to move. Let's go back to just price and let's reset our expected move going into the end of April and into May. Now, I just went out to the option chain and let me just show you what I did here. I'm not going to go through this again, but if we go out to Bitcoin and if we pick on the 24th of April, which is now happening in a little less than 3 weeks, if we look at the current price, which is about 67 and change, the closest that we can come to that is about the 6,500 options. So what I'm going to do is add up what the at the money straddle is going to be. What I'm doing here is adding up what is the at the money, which is the closest strike to where the current price is. And I'm roughly looking for the midpoint price. And if I compare the midpoint price of buying a call and buying a put at the same time, the at the money straddle is going to be somewhere around 1070. And so what we're going to do is we're going to look at the current price plus and minus 1070. So the current price plus and minus 1070 into that expiration, and that's going to give us our probability curve, which is going to give us the 68.2% probability, or really the center of the bell curve of the normal distribution. So when I put those numbers together, I see an upper target of 78.45. Let's go ahead and draw our arc in. So 78.45 is going to be, let's see if we can dial this in. Pretty close. We don't have to be exact. There's the first coordinate for April expiration. The bottom coordinate is going to be 57.05. Close enough. And then we're just going to pull this out to where the price is today. And that is our 68.2% probability curve going forward into April 24. Let's go ahead and do the same thing for May expiration. So this is the 29th of May into the end of May, which is a few weeks out. So let's go ahead and do that same thing here. So we're going to grab that arc, and our upper bound on this is going to be 86.95. And that's pretty close. And then the bottom coordinate is going to be 48.55. And that's that coordinate. So let's go ahead and change the color on this one just so that they stand out a little bit better. And we are good to go. Now, what can we do with these probability curves? What we can do is, if we're setting targets, if we're selling options, we can put them outside or at the probability curve, and we know that we then have a certain probability according to where the option chain is priced right now of winning that trade. This allows us to be a little bit more statistical, a little bit more analytical about where we put our targets, instead of just haphazardly saying, well, that's support and that's resistance, so let's see what we can get up there. Now, something else that comes into play here is that right now the implied volatility has come in quite a bit. It's still not down to pre-crash levels of early March, but it's come down quite a bit. And so we may consider doing something like adding a straddle, especially when we have the energies as wired up as they are. You can do this a couple of different ways. So either you can go ahead and say, I have no idea which way the price is going to go. It's sitting up here at 6,700 and change right now. It can go higher. It can go lower. So you can simply play a straddle. Now, here's the deal with the straddle is, if you think that there's going to be price movement in the very near future, so in other words, within days, then what you don't want to do is you don't want to buy too much time. You don't want to spend, in this case, per contract, it would be almost $2,000, about $1,900 for a straddle on Bitcoin. Now, the short-term straddle is not that much cheaper. It's about half the price. It's about $10.70. But here's the key, is that the price has got to exceed that straddle, or be on the trajectory to exceed that straddle. So in other words, we could get a really big movement over the course of one day, which does not exceed the straddle price, but it'll still be enough to generate a really nice profit on the trade for you. And I typically will take these off at about 50%. So in other words, if I spend $100 on the straddle, I'll take it off at 150 after a 50% gain. And of course, you don't have to leverage an entire contract. You can break this down, whether or not you're playing this on Ledger X, you can break it down into hundredths of a BTC, or in Deribit, I believe, is tenths of a BTC. Now, we really haven't talked about Ethereum yet, and that may be the better play here. Let's go ahead and get ourselves a probability curve for the 24th of April, which is going to be right in this area. There we go. And I've already got this one mapped out. There's an expected move plus minus 24 into 24 April. So let's draw our arc up there. The upper expected move target is about 167. And the lower coordinate is 119. We'll get pretty close here. And there we go. This one to me seems like a better bet, because not only is it less expensive to play options on Ethereum through Deribit, but right now the market is not pricing in that big of a move. So the at the money straddle price right now is $24 for an entire contract on Ethereum. So you could experiment with this for a lot less capital. One final thought here is that if you do believe with all your heart that the price is going to pull back first before it does rally, which to me seems more logical for the price to pull back, because I'm expecting a little bit of one final hissy fit from the larger markets, then there's a couple of different ways that you could play something like this, through either buying out of the money puts. That is one way to do it, or you can buy a vertical spread, which are not necessarily all that efficient, simply because you have to add two different options. You have to add the long option first and then add the short option. So a super aggressive trade would be, we have a 5,700 target to the downside. A super aggressive trade would be to just go ahead and buy the put at that level, which would explode in value if the price got down to there. So roughly what we'd see is this put at this level, and this is discounting any effects from implied volatility, which should be dramatic at this point. But what you could say is what is at the money would be at the money now, would be at the money then. And right now the price is, like we said, about 6,700. So an option which right now is worth, say, $410 would be at least worth $410 at that point. So if you bought it for maybe 140, 150, that would at least triple in value by the time that the price got down there. And that, again, is discounting any effects from implied volatility, which should dramatically raise the value of that option. Now, the risk here is that you got to be right in terms of direction, and you also have to be right because the move has to come well before the 24th of April. Otherwise, your time value on that extrinsic value would just disappear. It'll just evaporate. But this is one way that you can place, say, if you're more bearish than anything else right now, the at-the-money straddle can be kind of expensive and adds a little bit of friction to the trade. So you have to have an explosive move in your direction that typically offers the trajectory of going past that expected move for you to be able to profit. So this may be another way that you can set up with a very limited risk fashion. You can say, well, look, I really believe that we're going to get a break to the downside. And what you can simply do is not, don't look for a huge return or anything like that. You can just simply say, I'm going to look for a double. So if I get into this for 140, I'll take it off at 280 and say, thank you very much. Or you can scale out of it if you want to. There's a lot of different ways, but this to me is probably a good aggressive trade right now, considering that we're at a relative low in implied volatility. Okay, folks, that is it for today's report. I hope that makes sense. Hope that gives you some opportunities. Right now, just trying to pick a winner is like picking a needle in a haystack in this market. We are getting specific coins that are going like crazy, like what we've talked about with Ocean and with Hero, but very, very few of those. Everything else is kind of running together. Everything else is correlated. So in my mind, the best plays these days are looking for contrarian option plays. Thanks for listening. We'll see you Monday.